Okay, everybody, welcome back to Sniper Gains. Now, it's been pretty much a minute since my last stream, so I want to kind of give you an update of where I am in terms of my trading progress. So let's take a look at my Topstep account. All right. It's not supposed to. Give me 1 second. Okay, so right now, this is the account. I wanted to kind of give you an idea of what we're working with. So if we scroll down, I think in my last stream, I had taken a loss of $297.68. So I had taken some trade on some currencies. So 6S being Swiss franc, and then 6J being the Japanese yen. Both of them did not turn out well. So the next day, I did some off-stream trades. I did one on silver, which came out at around 240. Let me zoom that in. And then the last one that I took yesterday was 2 trades, one on RTY and then one on MHG. So this is important because if you take a look at this right here, the balance, that's going to be $4,641.59. And with the second one, it's going to be $4,728.40. So my goal at this moment in time is to essentially keep a balance of 4,000 on each account, and anything above I can take out. So ideally, I need one more winning day for me to qualify as a payout, because I did a payout request, I think, on the 17th. So I would have 1, 2, 3, 4, and hopefully today would be the 5th day. So I can take a payout and then move on to getting it requested to my Wise account. So that's pretty much the game plan. I'm going to take a look at the charts to see what we're working with. Now, I'm looking at GC. GC caught my eye. As you can see, it popped out of this barrier right here. So this is the 50 EMA, and these are the SAR dots. So these parabolic SAR dots at the bottom represents bullish momentum, which is good. And this is the 50 EMA, which represents the directional bias. So whenever our candle is above, then we have a bullish directional bias. Whenever it's below, we have a bearish directional bias. Ideally, I prefer that the candle is fully above or below. But in this case, it's obvious there's a lot of bullish inflow going to GC. So that's where I'm going to be looking at the other tickers as well to see if I can find an opening. So the first one that I'm looking at right now is going to be on copper. So let me show you this. I'm going to remove the drawings. So copper had its last bearish parabolic SAR right on top, and now it has done the flip. This right here is showing us a red candle. So there's a good chance in about an hour or two that it will probably sweep the bottom and then push upwards. If that is the case, then absolutely I would want to take that advantage, because copper can definitely push. So I'm going to eye copper very heavily. Silver might be a little bit tougher just because the momentum is pretty strong right now. And same thing with gold. So my best bet right now would most likely be on copper. So what I'm going to do in the meantime, while we wait for it to do its thing, is I'm going to draw my box. And if you've ever watched any of my live streams, you'll probably understand that I use the AMD model, which is accumulation, manipulation, distribution. Right now, this would be my designated accumulation hour, which is the 5 o'clock hour. We at 42 minutes and 15 seconds, so it's going to take some time for it to form. But the next hour after this, which would be 6 o'clock, I will hoping it will sweep the bottom, form a bullish fair value gap that I can enter to push up. Typically, I like it to close inside, but because of how gold is moving, if it gives me an opening, even a slight opening of a 5-minute fair value gap, I'll most likely take it to right up. So that's the goal. Now, I want to put this on mute so that way I can kind of see how the audio sounds, make sure everything is good. So give me just 1 minute. Okay, so I'm looking at copper. Copper is definitely pushing down at the moment, but it's forming the candle. So ideally, what I'm anticipating is if gold is pushing, because right now it's about 19.5, it will typically push pretty hard. And if that's going to happen, I will need to see if possibly maybe silver might go sweep the bottom and then push up. That's the thing. I need a sweep at the bottom of the box. So let's just say you're trying to figure out, okay, why is he so focused about sweeping the bottom of the box? So pretty much what I use is known as accumulation, manipulation, distribution. So let me draw this as a visual. We're going to do it into 3 parts. So part 1, part 2, part 3. So we're going to take, what is this thing? Where are you? I'm trying to find there's a specific line. No, give me 1 second here. Okay, the polyline. So let's just say you have a lot of price action coming in, accumulating. So this would be considered accumulation, right? Now, when there's a sweep, this is considered manipulation. Now, with any of these hourly candles, there are lots of buy orders and sell orders, all contained in this. Let's say this was 1 hour. This is a random example. I'll label this hour 1 a.m. So here we go. I'll label this 1 hour 1 a.m. So just say 1 a.m. EST, right? And that would be the accumulation hour. Gonna click OK. Okay. So ideally with these candles that you're seeing here, there are lots of buy orders and sell orders stacked throughout the candle. However, what I've noticed is the best spots to target will always be the top and the bottom, because typically a good chunk of liquidity rests at the top and bottom of each of these hourly candles. So the bottom will naturally have buy orders going up. The top will naturally have sell orders trying to push price down. One key thing is anytime you see this wick, right, this long wick on the top of any candle, that represents selling pressure. Anytime you see a wick at the bottom of a candle, any candle, it represents bullish pressure. So in the same concept, any orders that are over here are most likely going to be bearish. Any orders at the bottom of any candle are most likely going to be bullish. So with that in mind, when it comes to the accumulation, we have an accumulation, but we need a sweep. The sweep is essentially something like this that takes out the bottom and then hopefully closes inside the range. So in this case, this is the accumulation. Now, when we get a sweep, we're looking to see, oh man, 1 second. I'm just trying to find that accumulation line. 1 sec. Okay, 1 second here. Polyline. All right. So now in the accumulation stage, it will push up, maybe go back down a little bit, but then it's going to keep doing its thing all the way out. Okay. So let's just say this happened in the 1 a.m. Eastern hour. The next hour over will always be the manipulation hour. So the way I like to do it is, let's just say I pick an hour, which might be this one right here, right? 5 a.m. The next hour over is what I consider the manipulation hour. In that hour specifically, I need to see a sweep at the bottom or the top. If it sweeps the bottom, I'll be zooming into the 5-minute to find a 5-minute fair value gap formed after the sweep. And it's always going to be targeting the first fair value gap that is formed after the sweep. So with this hour, as an example, I would just type in, oh shoot. I would just type in over here, as an example, 2 a.m. manipulation hour. Now, in this manipulation hour, that 5-minute fair value gap, it needs to form within the hour. One key thing, and this is the most important thing that I use in my strategy, is if that 5-minute fair value gap does not form within that manipulation hour, which is always going to be 1 hour after your designated accumulation hour, is that it needs to form by 9 or by the 55-minute marker. So let me explain. Let's just say I wanted to isolate this candle right here. You see how this says 12, right? If I were to take the replay tool, start again, come on, buddy. There we go. So we all agree that this is the 12 o'clock candle, right? Now, since my entry is going to be on the 5-minute, one key thing that I want to see is if I go on the 5-minute, you'll see that it ends in 12:55. So keep that in mind whenever you're going for any hour. So we're going to go to another hour. Let's just say it's this one right here, 11 o'clock. If we use the replay tool and we were to go and zoom in on the 5-minute, it ends in 55. So always remember that fair value gap needs to form by that 55-minute candle. Super important. So after that, what I'm doing then is when I see this fair value gap, I'm going to put it in, let's say green. I would wait for it to fill the gap. So let's just say it was here, right? I wanted to fill this gap, and then I would put my entry targeting the top. So it'd be like this, then targeting the top. And ideally, I want it to be a 2R or higher. If I see a good setup that's less than the 2R, I will use a late entry that's modified to at least give me a 2R. Because if I see a good setup, I'm not going to just skip on it just because the R is small. I can purposely use a late entry to kind of, improve the risk to reward. Because risk to reward is everything for my strategy. Because as you can see, it's not necessarily like the greatest win rate in the world. You know, it's putting it at about 48. So if I look at the beginning of this account, since this account was created in July, and we move over to October, you see it's spotting like about a 44% win rate and a profit factor of 1.91. So that's why it's more focused on taking good setups and maximizing that average win. Now, keep in mind, this number entails everything, including other strategies that I've done in the past. But it's just to kind of show you an idea that even though it's not a perfect win rate, it's something that it has been sustainable for me personally. And that's what I've been using specifically on metals, because metals have this way of following through. So hopefully we can get to see an example live, but we do have to wait and see what the market does in this case. And then obviously the third box would represent distribution. Now in the distribution aspect of this, let me change the color. So for distribution, if I click on it, it would be from 3 to whatever the time is. So let's just say it took about 3 hours. Then I would label it like that. But this is basically the AMD model. But the benefit of using CRT is it helps to make the AMD process a lot easier and more streamlined, because now instead of me guessing what is considered accumulation, manipulation, distribution, I can always use the 1 hour candlesticks as my guide. And in my version of the CRT, it definitely has been very fruitful. I'm just more working on just refining a few things, but I think it's gotten to a point where I feel very comfortable, using it more and more often. And now it's just to wait and see what the market gives us. There are some pros and cons. The pro is with this system, it forces me to be hyper selective about my CRT setups, because I ideally like taking one trade in a day. The maximum I'm willing to take are 3 trades. And if we do see a setup today that does look good, then I can kind of show you how I go through the risk management aspect of this system. So we're just going to clear this out. And then we're going to go on the 1 hour. Just want to focus in on each of the 3 metals. So I mainly trade GC, silver, and copper. So we're going to go here, draw our box. So that's for silver. This one is going to be for gold. And the last one is going to be for copper. Now with copper, it's a unique one. I'm just trying to see how it'll play. But if I see an opening that I like, I will take advantage of it. We have about 30 minutes until the next hour, the what I would consider the manipulation hour. So in the meantime, let's label and see if we get a clean move. So we're going to go here. This is going to be 5 a.m. So we'll draw a box. So this would be 5 a.m. So I'm going to draw a box. Go over here. Draw it right there. And I'm going to label this 5 a.m. Accumulation hour. Then the next one is going to be the 6 a.m. manipulation hour. And then the last one, we'll see what happens. So right now, let's just say we find that the 5 a.m. is invalidated. Then I would move on to the 6 a.m. manipulation hour. There are a few ways that this CRT model would be invalidated. The first way is if we're bullish, right? We know that GC's pumping, right? It's pumping up pretty hard. And it's most likely going to continue that bullish momentum, at least going towards the New York session. So if we know it's pumping and we want to go long, we have to make sure that the bottom where the buy orders, or where we have the sell orders or the sell stops, is swept, because the people who are buying here will put a stop limit or a sell stop limit to protect themselves. So the way it would work in order to keep price moving is market makers will typically push, take out the liquidity, then enter their positions to go up. The reason why this happens is that if big orders came in, it would just shoot up the price a lot. And they're still trying to make money on their end. You know, like you as a trader, you're trying to go for a 1 to 2, right? They're probably going for a 1 to 2 too. But if they enter, they can get a bad fill. So for them to work with the system, they engineer setups where it takes people out, then they enter the positions, and then they push price. Now, does this happen every single hour? No. There are certain times where they'll just keep moving up. But does it happen enough times for it to be a pattern? Yeah. So I'm waiting for those times when it sweeps so that way I can enter in and then push upwards. So that's pretty much the game plan. I'm looking at both of these just to try to see. This one with copper is going to be unique because it's like halfway. Yes, right now it's above the 50 a little bit, but not all the way. So I'll try to see how copper will work out. Silver is in a much cleaner position, meaning the 1 hour accumulation candle is fully above the 50 EMA and has the parabolic SOR dots confirming that bullish momentum. And this is more bullish directional bias. So this is good. However, I feel like within the next 30 minutes, it will most likely do a liquidity run instead of a sweep. And if it does a run, then there's no play for me. But if it does a sweep, then there might be a really good play for me to enter on. So we'll see, because gold has a tendency when it starts chugging along, it starts moving. So you really want to be able to take advantage of the bullish movement. So I'm just waiting. We'll see what happens next. And yeah. Okay, so while we're waiting for gold to keep chugging up, I'm looking at the time. We're at 5:46, so we're about 14 to 15 minutes until the next candle forms. Now, depending on where it forms, it will determine which one I go with. So I know gold is taking a little bit of a breather, which means that silver might be the play that I might be using to go up. So with that being said, I'm going to now go into my Topstep. And now we are going to go to the leader account, because this is where I can be able to actually activate the orders. Now, everyone has a different way of handling multiple accounts. For me, I always like to copy trade my trades so that way it can maximize what I'm doing. Now, I've seen people who like to rotate accounts, which is a great way of controlling risk. But for me personally, I control risk in a very unique way. So when it comes to my risk management, it's pretty simple. If the profit balance is from $0 to $3,999.99, I'm only going to risk the maximum of $300 in a day. Now, the way it will work is I'm only allowed to take 3 trades in a day. So naturally, I would like to split that 300 into thirds. It doesn't have to be perfectly matched, but it needs to be somewhat close to it to kind of afford me the chance to take 3 trades if I need to. Now, if I do go above 4,000, then it's 10%. I split that into thirds, and that kind of roughly is about 3% per trade. But I like to do it that way because that has been a model that has worked for me in terms of risk management. And yeah, the other element really is just going for high risk reward setups, because it does add up. So one of the things that definitely took a little bit of adjusting to was the win rate, because naturally everyone wants to get like a 60-70% win rate. It feels nice, but you don't really get paid based on your win rate. You get paid based on your profit factor. At the end of the day, this is the number that really matters. Not this. I mean, of course, this does matter, but not to the greater weight of a profit factor. And this matters as well, the average win to average loss. So these are the 2 most important numbers, in my opinion, than the win rate. Because you could have a crappy win rate and still have green days if you played right. You could just be taking many hits, and then you get this big trade and then you close. And you kind of, work the system. So, because I've seen people who have had like a 30% win rate and just get all greens, but then they're taking many trades to get the job done, which is fine. It's just, there is always that inherent danger of tilting. And, if you're like in a super losing streak, there's more pressure to keep winning. And that can be kind of stressful, especially if you're copy trading. So for me, it's a little bit different. I'm always limiting it to 3 trades, no matter what, even if I make a mistake. But I mainly focus it on my weeks. So the weeks are going to be the biggest part of the way I trade. I try to focus on closing green weeks. So let's just say I got to a sequence where I wanted to get a payout, right? And with Topstep, they're telling you have to have 5 winning days. What I would do, if it was me, this is not financial advice. Nothing that I'm saying here should be constituted as financial advice. I'm just a retail trader a retail trader who makes money using my own edge, my own style. But the results I'm getting doesn't necessarily mean that that's going to be the same exact results for you, because it's a little bit different, right? Each person's different. Each person's pain tolerance is different. So just keep in mind, whoever you're following, please do not copy their trades. You can learn from them, but always remember, it's a risky business that we're running. We're essentially trying to beat a casino, right? So you need to have hyper discipline, and you need to stick to your edge so that way you can win over a long series of trades. If you're not a person who wants to go through the ups and downs of trading, then you want to try to do a different profession for sure. So that's what I'm saying. With any advice I'm giving you, it is not financial advice and should not be constituted as financial advice. This is just me showcasing my journey as a trader. If you want to follow along, that's on you. But, over here at Sniper Games, we're not responsible for you pressing your buttons because we don't even put signals out. This is just pure trading, live. And the whole idea is to see a different perspective of trading that might be useful to you as a trader. Okay, so with that disclaimer out of the way I'm doing this is I'm mainly focusing on the weeks. So if I was going on Reddit, I saw a lot of people are like getting green days, but then it has the effect of like they have like 12 trades, and then they make $100, which means they were probably in deep drawdown to raise it up. That's not necessarily a style that I'm personally comfortable with. So I had to shift from worrying about having a winning day, right, to winning weeks. So naturally, yes, do I want to win as many days as possible? Absolutely. That's one of the reasons why right now, if you ever see these one trades, how I only took one trade and I cut it, I have a system where if I get the first trade and it's a win, I close it immediately, no matter what. Then if I take a hit, then I can take another trade. The maximum is 3 trades. So ideally, my goal as a trader is to close a green day using 1 trade or 3 trades or less. So they here took 2 days, 2 trades, 1 trade, closed it. 1 trade, I didn't see any setups. 2 trades, 1 trade, 2 trades, 2 trades, it didn't work out. 1, 1. This was a tough one, but I had to take 1. 3, that's when I started to have to be more defensive, but I was mainly focusing on closing for the winning week. Took 2 trades, didn't see a good setup, then I got 1 and then 2. So we're positive of 277.23. If we catch a pretty good trade today, then of at least 200 plus, then what I'll do is just take a payout. I'll take a payout of whatever that balance is, hopefully around 800 on this account, and then hopefully around close to 1,000 on this account. And then we wait 1, 2. On Monday, hopefully the wires payment will come in, and then we continue the new set, which would be for November. That's the game plan. So we'll see what happens based on today's price action. Speaking of which, let me go and see what's cooking. Okay. I'm liking this setup on CL, but I'm not liking this dip on gold a little bit. That's not too bad, I guess. As long as gold keeps pumping. It seems I'm most likely going to go with SIL, which is silver. So we're going to go to Topstep. I'm going to go to the account right over here. And then we're going to go to the chart. And then in the chart, we're going to type in SIL. So SIL represents micro silver, and SI is the mini version of silver. So most of the time, I'll probably be using SIL. It's very rare that I'm actually using SI because it tends to be very expensive. So I usually use SIL most of the time. So right here, I'm going to draw my boxes. So let's just clean everything up. I'm going to remove drawings. And then we are going to draw the box. So hopefully, right, with about 4 minutes to the next hour, that the candle will sweep the bottom first before pushing price upwards. So we're going to wait and see. We're going to draw vertical lines. We're definitely going to draw our vertical lines. Now, with this one, based on the time, which is going to be 6, we have roughly 3 hours heading into the New York session, one of the things that I personally don't like having to deal with is trading the New York session because it gets a little volatile. I've had some good setups recently at New York because there's been barely any news in the morning. But generally speaking, I prefer trading either Asia or London as much as possible. So with that doing its thing, and with that being 3 minutes, we're going to go and we're going to zoom into the 5-minute time frame. So the goal is, I'm hoping by the new hour, which will be 6, it will first sweep the bottom. So I've been saying this word sweep quite a lot. So what is my version of a sweep? It's very simple. If price even passes this box, even with one tick, I consider it a sweep. Whatever price action does in the manipulation hour, it could close in, which is what I would ideally want, but I'm going to be slightly aggressive to enter when I see that 5-minute fair value gap to push up, because when gold is popping, there is no stopping. When gold is popping, there's no stopping the move. So I need to at least prepare myself to be able to enter that trade. So I'm anticipating they'll sweep the buy orders that are here, sweep them, create a fair value gap, I'll enter on it, and then hopefully ride it up. So goal-wise, we need to at least hit a minimum 200, but ideally 400. If I can hit 400, then that would be 1,000 payout on each of the accounts. But if I hit like a different amount, then at least it needs to be 200 plus after the fees. So we'll see what happens. And now this is just all about waiting. So this is the 55 candle. Now we're going to wait for the new candle to form in about 1 minute. Okay, so now we are at 6:04. So we're going to try to see what it does in terms of the candle movement. So keep an eye on this just to see. We're looking at gold. See how gold keeps moving up, starting to pump up. We're going to keep an eye on that. And yeah, so this is just mainly a waiting game just to see how it'll move. With copper, it's in this weird spot. It's like it is technically above, but I may have to wait patiently for this candle here. Because if it sweeps here, it's still okay. It would be more like a C setup. But if I can get a sweep on this one, it would be an A setup. Because at least the box or the accumulation hour would be fully above that 50 EMA. There will be no ambiguity when it comes to that. With gold, kind of similar, so I would be looking at this one. But the odds are I'm most likely going to get a trade through CL. Or CIL, sorry guys. CIL. CL is it's SIL. I don't know why I'm saying CL. CL is crude oil. It's in the morning, guys. It's SIL. SIL. Oh, shoot. Have I been saying CL this whole time? Man, that sucks. I meant to say SIL. SIL. Okay, so this is just a waiting game. We just wait on our hands, and we'll see what happens. I'm going to put an alert, just to alert me. And while it's cooking, we'll see what's going on with the other tickers. So right now, NQ. NQ. NQ has some very interesting price action. It almost looks like it's just been chopping around, but hasn't really like actually made a real move. It's just been moving up and down, which is not necessarily the easiest to trade unless you're really good with range trades. Yeah, that's the ES. Man, sometimes crude can be very cruel sometimes, because here, and that's kind of one of the things I've been concerned about CL, is it puts out too many sequences where you could just be losing so much money in terms of these wicks. So that's why I kind of try to avoid CL, because the follow through is never as clean as the metals. So I try to stay away from CL, even though it technically can work. Okay, that's what it's not good. Okay, I know with CL, because I've taken trades before. Like this one was a clean follow through. So, for example, here, right? Say if I go into replay mode, click here. So, same theory, right? I'm choosing this as my designated hour, which is the 8 o'clock. So I immediately have to draw my accumulation hour, which will always be 1 hour after. So if this is 8, it will be 9 to 10. Then you zoom on the 5 minute and try to see where you have a 5 minute fair value gap. So in this case, it didn't have a fair value gap, so this one wouldn't count, which is frustrating, especially if you were looking for a good setup. But let's see if there's one where it's textbook perfect. So I think this was one of them. So we're going to go here. If I'm choosing that this is going to be my designated accumulation hour, then this will be my manipulation hour. So put my vertical lines. Then I'm going to use the replay tool. Go in here. Go to the 5 minute. And now here we have that gap. And I think I took this trade too. So this is something very, very important that I want to point out right here. So it formed the fair value gap, right? But the reason why I wait on a conservative play, the reason why I wait for the 55-minute candle to close in is because it can get a little bit choppy. So if you just wait for it to close in, you'll be good. It has already filled the gap. So what I like to do in this case is I would have to use a late entry. I took this trade, but it was like all the way up here because I just spotted it out of the blue. But it would be kind of like this. I would put my stop loss at the lowest swing of that hour. So that's one benefit of being patient and waiting for that 55-minute candle to close to get that confirmation that it is truly a CRT setup. There are times where I will be more aggressive and enter immediately, but there's also a risk of getting stopped out. So that it can be both good and bad. That's the chance sometimes I might have to take if I need to catch a play. But the idea is you'd enter here and then you target the top, which would have been a 6.43R trade. And yes, this literally does happen. That's why I'm really focused in on the CRT, because it allows me to risk small but get bigger gains, which is always a win, especially with a person who is averaging about a 40 to 50% win rate on the strategy. So if I take a look at my TradeZella, go to my playbooks, and I look at the strategy. So overall, it has a win rate of 51%, 37 trades, 3.51 risk reward. What I'm working on currently is the bearish side. It's at 1.61, 46%. But I believe with the new restrictions that I've put in place to only trade the metals, that this should bump up a little bit better over time. So now it's just a waiting game. In the meantime, you can take a look and see how I've been doing. So for the month, we've done pretty well. We've made, in terms of profit, $6,140, and that's copy trading on 2 accounts. So that's a huge improvement for me personally, because last month I made about $3,736.36 with a win rate of only 43%. We were able to still get a profit factor of 2.6, but the daily win rate was about 58.82. Now, for this month, so far, we have bumped up the win rate to about 48.28, bumped up the profit factor a little bit to a 2.64. Win rate on the daily is 64.71, and we pretty much got up to $6,139.06. So even though the win rate is not as glamorous, right? The key is risking small, going big, and just using good risk management system. And that system that I told you about before is what I've been using, because in the past, you'll probably see it here, I was at one point funded in the beginning of 2024, but then I was taking random strategies and I started to plummet. But then I learned of a different strategy that I use. I don't use it anymore, but it got me out of that drawdown. And then over time, I adapted to the 1 hour CRT, and then it started to skyrocket. So that's pretty much where I'm at now. But in this phase, this red phase, I was trying multiple strategies, silver bullets. They were not working for me specifically. Tried various strategies, but until I figured out the CRT, and that strategy just clicked for me. And as soon as I honed in on it, it really pushed up that profit. So that's kind of the thing. You have to figure out what your edge is, because there are people who trade supply and demand, and they're like legends for it. And the people who trade support and resistance, and they do very, very well. It's just, for me, it just so happened that the CRT is what aligned with my trading personality. And then I took it, and I've just been working on refining it as much as I can to make it consistently profitable over a long period of trades. So that's pretty much where I'm at. And now I'm mainly focusing on seeing if we can get a clean sweep at the bottom. So let's see. Okay, it's about to be game time. Game time. So over here, it's about to sweep. We're going to take a look at it, and now we need to start running numbers. So when I'm doing this, the first step is I need to know how much each contract is going to cost me. So if you go on like Topstep, they'll probably be able to have a list of all the fees. I just saved it on my PDF, on my Google Docs. So I'm going to go to Google Docs right now. I'm going to look at my strategy, risk management for futures prop trading. This is just for me. It's like a little guide of rules that I've set up over the years to kind of keep me accountable, help me to grow the accounts properly. But anyway, this is what you guys really care about right here, about the fees. So let's just say I wanted to trade SIL. I would just do Control F, SIL. Bam. It's going to be $2.04 per contract. So I'm going to keep that in mind. I'm going to take out this one here, take that out, keep this, take this extra tab off, take this one off, so that way we don't have too many tabs running in the background. So all we're doing now is we're just waiting, and we're trying to see what we want to do. Now, since I'm above 400, right? 400 divided by 3 is about $133. So when I'm looking at this play, I ideally want to be around $133, around $150 max, to still give me a little bit of cushion to catch maybe 2 or 3 trades. That's the idea. Now, based on the time, it being closer to about 6:20, I'm most likely gonna probably pushing maybe for just maybe 2 trades. But if I can catch this one and it's, you know, positive, boom, would already have accomplished the goal, the mission. And then at that time, it's all gravy. So we just have to wait and see. So this is actually going to be important. Let's just say this hour right here, the 5 a.m. hour, right? If this goes up, then this candle, the 5 a.m. candle, has become invalid, and I would have to shift to the new one. And the reason why is pretty simple. If gold is pushing up and we're sweeping that top, based on the CRT model, we'll be looking for a bearish fair value gap, which would go contrary to the overall volume or the overall momentum of gold. So if that were to happen, then I would shift my hour to the next hour and see if it will sweep the bottom instead. So we'll see what happens with copper. Like I said, copper is more of that B setup at the moment. So it's not perfect, but I'm looking at it just in case. Gold at the moment right now is also dropping at the same time. So it's dropping a little bit. Hopefully it will just drop to sweep up. Because if I can catch an entry on gold, that would be crazy. Because when gold pumps, it pumps hard. So I have to always be aware of that. Now SIL is going down, which is good. I just needed to go and start to form a 5-minute fair value gap. So I'm going to really be eyeing gold and SIL just to see how it's moving. I will probably be a little bit more aggressive on SIL. On silver, on micro silver, there we go. We got the push. So now when we've gotten the push, we need to zoom into the 5-minute time frame. And I'm now needing to pay attention to if it will form a fair value gap. So for me, at this moment in time, it has already swept, right? So the thing is, will it form a fair value gap, a 5-minute fair value gap that I can enter on to push up? That's the question. While it's going down, I'm also going to be eyeing gold as well, just to monitor what it's doing. So here, I'm going to put in my arrows or my vertical lines just to see. So it's more about gauging and just being a little bit patient with the setup. This is where it will get a little bit interesting. When I see a 5-minute fair value gap form, if it does form, I'm going to be eyeing gold to make sure it's really pushing, because I want to make sure that I'm entering with bullish momentum. Right now, it is forming a red hourly candle, which could be a setup to get a long upwards, but I have to see if this is just more of a retracement down to the 50% in order to push up. So we'll see. Okay, so it is 625. Now let's take a look at what's happening to gold. So gold is putting a lot of bearish pressure down over here. Now the thing about it is, what I'm trying to see is if it's going to bounce off and push up, or if it wants to do another sweep at the bottom to push up. So this is just now a waiting game. I'm going to be taking a look at SIL, see how it's doing. Let's take a look. Now, let's just kind of run some numbers just to kind of get an idea of what or how much we could make out of this play. So this is going to be more of an aggressive option. And if I went aggressive, I got to see what it would look like. So I'm just running numbers right now. Okay, so first step, let's just say hypothetically it were to form a fair value gap over here by, shoot, 1 second. Let me try that again. I'm going to put this right here, sell limit. Try to see what's going on here. I should say buy limit. Sorry about that. Buy limit. Okay. So with one contract right here be around 120 bucks. However, if we were to target here, it'd be around 420, which would be awesome, right? So that 120 plus the 204, which is how much it'll cost for the SIL contract, is well within my risk parameters. It would give me a 3.42, so that's positive. However, we're going to have to wait and see if we do form a bullish fair value gap. I will need to keep an eye on gold as well, because gold is what I'm betting is going to keep going up, but we'll see what happens. So we're going to just keep taking a look, keep eyeing gold. We have about around 30 more minutes until the next hour. So we got to keep an eye on gold just to see what it's doing. Copper at the moment is going to be a tricky play, but it can still count. As long as it stays up, that will be ideal. So we'll see what happens with copper. But right now, my main focus is going to be on SIL to see if it will form that fair value gap. And we're going to risk small. We're risking about 120 bucks. So yeah, pretty much what's happening right now is I'm waiting to see if this red candle right here is going to hold and then get a sweep at the bottom to push up. Now, based on everything I've been seeing, we have bullish sword dots. Basically what this means is a lot of bullish momentum going in. And also it has gone above the 50 EMA line. So with those two factors in place, I believe that gold is still going to push. And ideally, I would want to get an entry that will allow me to push upwards before having to enter the New York session. Because when the New York session hits, it tends to be a little bit too crazy, which I don't like. So I'm hoping to see if this will hold. So for right now, I may have to wait for those 30 minutes. I want to see how this candle will perform. If this candle closes inside, then for this SIL trade, I'm going to be more cautious to wait for it to close above. So it's kind of in that little gray zone. But I believe that overall, gold is going to push up, in my opinion. But I just need to see how it's going to read the price action in the next 30 minutes. So we're just going to keep an eye on gold. as we keep an eye on SIL. So this is what I meant. It gets a little bit trickier with SIL because it's taking a huge stop loss for me to be able to target this. So I'm going to have to just keep an eye and see how price action is going to form during this time. So there's no trade yet, but I do need to keep an eye because gold has this tendency to try to push up at the moment. And if that happens, I need to be aware of what's going on. When it comes to copper, it's unique, but it's not yet an A+ setup in my opinion. I'm just going to have to just wait it out, see what happens. But I'm still eyeing on gold to push up. So SIL is naturally the one that I'm going to be paying a lot of attention to. See, gold now is really going down. It really is pushing down, which is not good. That might be a flip in direction. So based on how gold is moving, I would need to be very careful about trying to go long until it makes a decision. So I'm anticipating that it wants to sweep this and then go up. If that is the case, I will have to be careful. So we just have to keep an eye on this and see what it does. So it appears on the 6 a.m. candle, it's really pushing down. Now I'm kind of curious to see if it's pushing down to take out the liquidity here to push up. If it does that, that's unique. That would be a unique situation because technically I could go long. But I'll see what happens on that one. That would be like a trickier play. So we'll have to see what happens with that. But yeah, it definitely seems that it wants to target the buy stops over here. So if that's the case, I'm going to have to pivot a little bit and see if it can sweep but close inside. So we'll see what happens on that. The SIL trade, obviously it hasn't closed in, so there's nothing we can do on that one. It just seems like it wants to keep going down, which is fine. It's not a problem. I just have to kind of gauge how gold wants to take care of this hour in particular. So this is a very important hour to me personally, the 5 o'clock hour. If it goes sweeps, forms a bullish fair value gap, right? It forms a bullish fair value gap and closes in, then I'll take the trade. If it forms a bullish fair value gap and doesn't close in, then I might be more hesitant about taking the trade. So I will have to kind of gauge this because this is a unique sequence that's going on right now. So I'm just going to keep an eye on this. And I'll keep an eye on SIL at the same time. Okay, right now it's really pushing to take out this liquidity over here. And while it's doing that, I need to open up a new window and then see what MGC is doing. So I'm going to go to MGC. We're going to clear the past drawings so that way we have a fresh set of drawings to work with. And then we're going to go to the 1 hour time frame. So depending on how it wants to play this, it could either push and have a strong push on the inside, or it could just plummet. If it plummets, then we might have to take a little pause on taking any bullish setups because I don't want it to plummet like that. So let me just gauge it out. I want to see what that candle does in particular. So we're going to focus in on this candle. So this is the 35 candle. And I need, at least for the 45, 50, 55 candle to form a bullish fair value gap. And ideally would want to make sure that the risk is not as high since it's more high risk to try to enter at this spot. But it might be the only play for the day. So I have to be a little bit more aggressive. And the reason why I'm being a little bit more aggressive is because of time. I usually try to want to get my plays before having to go to New York session. So at it being 7.2, hypothetically speaking, I'll be comfortable, putting or risking about 144 if it required me to do so. So like here is 75. So 75 times 2, right, is equal to 75 times 2 is equal to about 150. So it is on the higher end, like the max end. If it forms like a really big stop loss, then I would just have to drop the contract to around, 1 micro contract. But it all depends on what this candle does right here. So if it does form a fair value gap around here, then it wouldn't be too bad. But if it's like an 82, I may just have to play it safe and go 1 contract, even though I would love to go more, and then play it to the upside and kind of push and extend. I think that would be the smarter play. Usually I would be undersized with this, but I don't want to be at around pushing past 150. So the safe play would probably be 1 micro contract, still target the top. And then for that 1 micro contract, it would be $310. So $310 is still pretty good, but because this is gold, it can allow me to push up. So we'll see what happens. If it does work out, then that would be awesome. So it would be 124 per contract. So I'm going to write that down. And we're just going to keep eyeing this. So this technically would be more of a B setup. And the reason why it's a B is this accumulation hour, technically a majority of it is on the upside, but a little bit of the bottom is at the bottom side. So if I were to take this trade, it would be a B setup. So for a B setup, I may not put too much weight on it. I can look for an A setup with SIL. So SIL does have a setup that could work if the risk is not as much. The problem with SIL at the moment is it can be, a little bit extreme in terms of how much I'm spending, and it hasn't formed any bullish fair value gaps yet. Let me take this out. I'm going to go to buy SIL. So let's just say it was like right there, just as an example. That would be 130, which is fine, actually. It's not bad. That would be 400, which is not bad either. So if I were to do this one, it would have to be one contract targeting the top. So it's either going to be this one or it's either going to be the MGC. So either one can be good. I just need to see a 5-minute fair value gap form. So if it's this one, I'll take it to the upside. Ideally, gold, since it's what I like to call the king of the metals, I'll be pushing for that. It is 642, so it is starting to form. So I'm going to be eyeing gold pretty heavily, because whenever gold forms that bullish fair value gap, you want to take advantage of it. It is going to be slightly undersized at only 1 micro contract, which is fine for now. Right now, I'd rather play to the upside and see if I can push above that. So that way we can try to hit 400. So if we were to try to hit 400, which is like about maybe around about there, we should be good if this forms a bullish fair value gap. But if this one doesn't form one, then I'm most likely going to go for SIL, which seems to probably be the one that I may have to use. So we'll see what happens with gold, because yes, it is pushing. So we'll see. This is like I said, this is a very unique situation. So I have to kind of keep an eye on both of these. And again, this is not perfect. Obviously, I would love for it to be like super perfect and everything's like awesome. But again, with something like this, it can't always be perfect. So I got to make sure that I put my stop loss at the lowest point of the manipulation hour. It is forming that fair value gap, which I really do like. And we'll see if it can close. If it can close, 1 micro contract, ready to go. And it's on SIL. If MGC can close, it would be perfect. But right now, it's not giving me an opening yet. So I'm still trying to see if I can get an opening on gold. But it hasn't given me an opening for me to enter on yet. So I'm just going to put it in like this. Just monitor. So with this one, it might be a situation where we have to wait and see, but my estimation is it's most likely going to go for this top right here. And if it goes for that, I'll probably just go with SIL, but it all depends on what gold is doing, because gold should be pushing up. I feel like it wanted to go and push up on this. With this one, it would be a B setup, but I feel like it will probably push up with the way it's moving. With this one, it would be more of an A setup. So with an A setup, I'm willing to put a little bit more risk on that. I just have to see if this fair value gap will hold. That's the key. If it holds, then we have a play. If it doesn't, then we may have to take a breather on that. So it's just an eyeing of both price actions. So this one is 45. So that's 45. So starting from here, it needs to form that fair value gap if I were to go on gold. If it does not form that fair value gap, then there's no play on gold. But I might be willing to take the play on... fries me, man. That's not good. That's not good at all, because if it goes and fills that gap, it might not be too good. So play's still there, but we can't have it fill. If it fills this gap, then there's no play on silver. So I have to really keep an eye on that. So I'm hoping in the next 5 to 10 minutes that this gap is going to remain intact. So yeah, I just need to wait at least until 6:50, and then bam, I can put a limit order right here with the bet that gold is most likely going to pump upwards. So this would be a little bit earlier. I'm hoping it will close in when it taps, when it have been entered in, that ultimately this hour would have closed in. But I'm not going to be sure yet until we'll see. We'll see what happens. But yeah, if I'm zooming in right now, there is this fair value gap. So this is important. If this gap can still remain for the next 3 minutes, just 3 more minutes, it becomes a valid gap that I can use to push up. But we have to see if it'll survive those 3 minutes of price action. Okay, it's looking good. It's looking good on SIL. We're taking a look at GC. So GC is pushing it down at 8.4. So we have to keep that in mind and see what happens. So with SIL or MGC, we are still at the 45-minute candle. I'm hoping that we see a big bullish push upwards. Because if this keeps going down, it will most likely try to take out this fair value gap right here. And if it takes it out, there's no play. Well, there might be a play over here, but then that would be too much risk. And that's the only problem. But the most important thing is I can always use a late entry, but this fair value gap has to print. And in order for it to print, I need just 2 more minutes for it to print, and then I can put my entry here. So if we go and run our numbers, and we had SIL, and we go to the 5-minute, because here it's forming the gap. It'd be a risk of like 125. So I want to keep it there in terms of the risk I'm putting on, because I don't want to burn all my trades or all my firepower on the first trade. So, okay, we're about to hit 650. So I'm going to start to set up my buy limit right here. So as soon as that says 650 on my system, then I'm going to push, and hopefully can hold without filling in that gap. If it does, then I'm willing to at least try to take a chance with 1 micro contract. So we're waiting for 650. There we go. That's a valid one. So this is going to be an aggressive entry. SIL to the long side. What I'm risking is about like I think like 125. I think it's 125. Right, a 125 plus 204. So it's like 127.04, which is still good in terms of my system, but we'll see what happens. So now I am taking an aggressive entry. Just a little bit, but at 127.04 is the total cost. going to put that there. But the total gain, if everything is correct, is going to be, if everything's good, is going to be 410. So 410. So that's going to be 410 minus 204. It represents 1 micro contract. That will equal 410 minus 204, 407.96. Okay, so that would be the gain and then the cost. So cost-wise, we are within our risk parameters. So we're just right under 133, which is fine. And what I'm doing now is I usually use this to kind of give me an idea of what we're working with. On MGC, there's also an opportunity. Shoot. Yeah. There's still an opportunity on MGC as well. So we'll see which one enters the fair value gap first. We'll see if it's this one or the other one, because it could be either one. I'm just trying to go for the one that will work. The one that will work. Man, don't leave me, bruh. Don't leave me, bruh. Please. Please don't leave me, man. Don't do this. Son of a French fry. Come on, buddy. Tag me in. Tag me, coach. Tag. Okay, so if it won't give me one on SIL, then I'll try to enter on this. Man, it's pumping. Come on, buddy. Come on. All you got to do is just fill the gap. Fill it. Come on. Come on, buddy. Just fill the gap. 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 So right now, we're just waiting for it to fill the gap. Just in case, I'm going to be looking at MGC. Right now, MGC is not really giving me anything in terms of the gap yet. So that's going to be a little concerning. But for SIL, the gap is definitely present. It's just the main question is, will it retrace, fill this gap to push? If it does, we're in. If not, then we have to walk away. So we'll see what happens. And yeah, so now it's just a waiting game. Now, if this price action hits this target, then there's no trade. So when it comes to my trading, I need to see that gap fill. That's just something I personally like to see before I enter, because my whole concept and theory is price will most likely or have a higher tendency to fill the gap first before going up. Sometimes it'll just tap like it is and then pump up. When those type of time happens, then I'm like, it is what it is. But the reason why I have to be very strict about it is because of risk right here, right? I mean, I have to kind of keep this controlled so I can give myself room for error, because you never know. So while that is doing its thing, I'm going to be looking at gold. Hopefully this is going to hold as a 5-minute fair value gap, because if it holds on gold, I already have a 1 micro loaded, ready to go. I just need to see which one will, hit my entry first, is basically the name of the game. So either gold, hopefully will hold that gap. We'll see which one goes, where it goes for. And if it holds, that'll be perfect. If not, I still have the SIL trade. I just need a gap fill, and then I can be able to enter on the trade setup. So I'm just eyeing just to see, keeping an eye on SIL. but also keeping an eye on gold as well, because once I enter one trade, I can't go and just start flipping around because that's too much risk. So I can only choose one of these two. If it's this one, it's one micro contract. If it's the other one, it's going to be one micro contract. So it's the battle of the micro contracts right now. So I need this price to tap. I will immediately enter to target the top of the 5 a.m. accumulation hour. So this is an important part. I have to wait for it to form this fair value gap, meaning we have to wait for about 4 minutes. And then from there, we can be able to move. Now, with something like this, especially with gold, I might have an aggressive entry, but I can't just enter until that gap forms. Like, it has to fill. So I'm hoping that SIL would just tap and then we're flying. But we have to wait for the price action to do its thing. If you take a look at gold, you'll see that now it's at a 3.8. So ideally what's happening, if I were to look at it on a larger time frame, let me go to gold, and then let me go to 1 hour. It essentially wanted to take out this liquidity right there. You see this little dot or this little line? Took out this liquidity and it's pushing up. So I'm betting with the bullish momentum, with it be basically above the 50 EMA, it's going to most likely push price towards the buy stops located on the 1 hour accumulation candle. So that is the goal. And while price is kind of going down a little bit, I'm going to keep eyeing gold. So see, now with gold, there's no fair value gap for me to enter on. So that kind of X's out this setup on gold, but SIL trade is still up and running. So let me see if there's anything on the other one. No, there's nothing on copper. So copper is kind of in a weird sluggish state, but I'm hoping that with the SIL, it can go tap, and then we can push up, hopefully. So we've eliminated gold for right now, at least for that 1 hour, but we do need it to tap or fill the gap, and then we'll enter the trade up. So with what's happening with gold, it is taking a push down a little bit, but I'm hoping that the bullish momentum from the parabolic SAR, the 50 EMA being above that 50 EMA, that it will do a one quick pump to the upside. But in the meantime, as gold is going down, this is going to force silver's price action to go down, and I'm hoping it will fill this, hold, right? It might have to go through some drawdown, but afterwards, hold the price from taking out this stop right here. And if it does do that, then we can push up, but we have to wait and see what happens next. Okay, so the good news is it closed inside. So if we take a look at the 5-minute time frame, you look at it on the hourly. So let me just move this candle over here. And then we just move this one over here, just temporarily. So it went all the way down, but then pushed all the way up. So that shows a lot of bullish momentum. So we're hoping that when it fills the gap, it will fill the gap, then push up again. So that's the goal for this setup. And I'm keeping it at that marker at 125. I just need to see a gap fill. Now this gap is like super, super tiny, but it's present. One thing that I've learned, even though it's ideal to have a very large fair value gap, what I've noticed is it's not always about the size all the time. It's just about the sequence. So with this one in particular, it's a little bit on the tricky side. I could take a chance on this, but then I would essentially be taking out a C setup where the candle is not fully above and does not form the fair value gap, and I can't be taking C setups, unfortunately. So my hope is that SIL will tap and then I can enter, because if it can do that, then that will be an A setup. Now A setups can fail. It's not that they always are perfect, but my job is to make sure that I'm taking the best trade setups as much as possible. This one is pretty good, but I do need it to at least even tap. If it could just tap this one more time, I would be willing to do that. It would be a slight increase in terms of my risk, but I cannot be going no more than this. No more than this gap right here. So that's why I'm just going to put it right there. That's my maximum. Because if I go above that, then I'm kind of pushing it, because I do need to give myself a little bit of room for other trades. So now it's just a waiting game. It's a waiting game at this point. I'm going to take a look and see how long we've been streaming for. So we've been streaming for about 1 hour and 50 minutes. If you've learned anything from my stream, it would be awesome if you could leave a comment. It goes a long way to know that someone out there is watching all this. Okay, back to business. So now we're just waiting for it to do a fill of this gap and then a pump up. Hopefully it can do it in that sequence. So we're just going to have to be super patient. I'm putting it up just a tiny bit, just in case it does a tap and then just pumps up. Usually they tap and then push up, but I'll just keep it like right there, just in case. But I still have to wait for it to go in. So with this tick, because it did 1, 2, I'm thinking it'll probably do a fill. Now the fill, or the gap between here, the fill, and here is so small that it's okay. But sometimes I might put it there just in case it just wants to do, very rarely, a push, tap, and then go. Because that happened to me with ES the other day. I was like, oh yeah, I'm gonna wait and see if it'll tap or fill. It tapped it and just flew. So now I just have to wait and be a little bit more patient. Okay, it's coming in. Let's see if we're going to get that gap and fill. Let's see. Let's see. Come on. Tag it. Yeah, because even if it does like a little halfway, it would be caught. So just going to put it right there. And then I will see what happens. Come on. Come on, just fill the gap. Fill the gap. I'll go for the gap and fill. I'll go for the gap and fill. Because I want it to be like textbook. I want it to be a textbook A+ trade. So come on, buddy. Come on, buddy. We're going to set it right here. We're going to practice some patience. We're going to wait for that fill. And then that's it. So we're going to sit and wait. Now, you might be wondering, what if it goes without you? What are you going to do? If it goes without me, we look for another setup. So that's one thing about my setups is I really want to practice super patience because it really goes a long way if I can just be patient enough to wait for that setup to come in and fill. Now, there's a good chance they could just skyrocket, go to the target and leave this setup. If that happens, it is what it is. I just have to move on. But when it comes to my strategy, I need that 5-minute gap and fill. I can always use a late entry to kind of like turn a bad risk to reward setup into something, favorable. But I need to see that gap and fill. Like that is so important for my strategy because it makes a difference in terms of the long running average risk to reward. So right now it's pumping. Hopefully we'll fill that gap. Then we can be able to enter the trade. So trade is still valid until a few things. Trade is valid until it hits the target. If it does fill and takes out the swing low or the lowest point of the manipulation hour, which would be 6 o'clock, then it becomes invalidated. So now we just have to wait. The next thing I'm going to do is I'm going to focus in on just putting I already put in my target over here. I'm also going to put in the stop loss over here. I just want to wait and see if it will fill the gap. I'm going to wait and see if it will fill the gap. If it fills the gap, this will say, order filled. And then I'll enter and hopefully use the bullish momentum and use this fair value gap as a springboard towards the top. So that's the game plan. Now, whatever happens, we fully accept this risk of 127.04. Like we have to accept it. So sometimes it can go super deep and then push up without taking out the stop loss. Sometimes it can just go in and just plummet. No matter what, I have to fully accept this risk of 127.04, meaning as soon as it hits and it pushes up, I do not mess around with the trade. I just let it go. So all I have to do is set it and wait and be patient because that patience is how you can win with this strategy. But if you're a person who enters the trade and like you want to capture cash now, it tends to hurt the P&L in the long run. So the key thing is I use the 5-minute gap and fill to really basically reduce as much risk as possible per trade and to really push my winners to be much higher. So that's the key thing that I typically look for, is to take low risk trades that have a high profit factor. Okay, so now price is coming in. It's heading towards it. So here we go. So if it's pushing, there's a probability that gold is going down pretty hard too. That kind of sucks a lot, but it's part of the process. I gotta follow the process. So I'm gonna keep an eye on that. What I'm hoping is that gold will hold and push up, but if it were to go down, then we lose 127.04, which is not a problem. We will just have to look for another setup. But I'm hoping that this is the setup so I don't have to take another trade unless I really need to. So this is how I kind of keep it low, because when it comes to this fair value gap, to be honest with you guys, I don't know if it will hold or not. But I do know is that when it forms that fair value gap and all these other conditions are there, that I need to take that trade, because the odds are around 50% of the time, it tends to work out in my favor. So knowing that, that is a bet that I'm willing to play every single time, because you want to play your hand in a way where you have an edge to win over a long period of trades. So I'm just going to patiently wait for that fill. We set the stop loss, and then we keep chugging along. While this is cooking, right? While this is cooking, we're going to go to copper. Let's see what copper is doing. So with copper, kind of a similar situation. It's about to push out of this, but it's not necessarily like an A plus setup yet. It's more of a B setup because a majority of that accumulation hour is above that 50 EMA, but it hasn't swept here yet. And if it sweeps the top, then this becomes invalid, and then we kind of keep going up. So we'll see. We'll see what happens. So we have to be up and alert and see what we're going to do. Come on, buddy. Come on, buddy. Come on. All right. We'll just have to keep waiting, keep eyeing, and seeing what happens next. Okay. I really hate when it does that. It's very annoying. There we go. All right, so it has filled the order. And now I'm going to have to do a few things. So first thing, got to set my stop loss. Make sure the stop loss is all the way to the pip. So now I'm risking about 130 bucks. All right. Next, I'm going to have to zoom out and push towards here. Move it right there. That's the target. That's the goal. Now at this stage, if you've ever seen my streams, this is where it's basically hands off. Meaning, no matter what, I'm not supposed to, how do I say? I'm not supposed to be trailing price, trying to like get involved with anything. It's either stop loss or take profit. That's kind of like the idea behind the system. So this sometimes can get a little bit intense, but what I've decided to do is when it gets to this stage, I put it on full screen so you guys can see it. But my main focus is most likely gonna be waiting to see what happens. So I'm gonna put this here. I'm gonna put this here. So we're risking about 130, 405 bucks is what we're projecting. So I guess we were slightly off on the numbers because of entering a little bit earlier, which makes sense. But generally, we are now waiting. So I'm going to set it in a way for you guys to see the results. So this is our entry. Kind of entered a little bit earlier, just in case. But then over here is our take profit at the top. So whatever happens, happens. So I'm going to put it on full screen so you guys can see everything. And then we will be able to review and see what happens after this trade. So with that being said, I'm going to go and get some water, take a little bit of a break, and then I'll double back and see what's going on. Oh, shoot. Maybe I might have to take a look at this a little bit later. We'll see what happens. I'll be right back. Okay, so if we're taking a look at the chart, you'll see it went in and into a very deep drawdown. So this is the part of the trading that kind of sucks, is that with this fair value gap, it's almost going to act as a rubber band, right? The goal is that when it goes through, most of the time, if I see a person, let me rephrase that again. Most of the time, when you see a fair value gap get blown through like this, you'd feel like, okay, maybe you should just not, that it's invalid. But the key thing with this strategy is this fair value gap almost acts like a rubber band. It goes in and holds price from taking out the stop loss. So it does have a deep drawdown that's uncomfortable if you risk heavy. That's why I risk small, so I can allow the edge to play out. So even in this case, it could probably still go through and just, take me out. And if it takes me out, it would be a loss of $132.04. So I need to update that because I did adjust a little bit, right? A 32 plus 204, that's a 132.04 would be the cost. But over here, it's one of those situations where I've noticed over a long period of time that it acts more like a rubber band, not like a brick wall. So when price is coming in through that gap, it almost acts like a rubber band to hold it, hopefully without having to take out the swing low. So let's just say I took a look at it on the 1 hour time frame. Pretty much on the 1 hour time frame, if you take a look at it, it's like really pushing down. Now, it can most likely push down and stop me out. That can happen. I can't control that. But the part of playing an edge is that I've noticed over a long series of trades that it does act as a rubber band that will hold price up when these other factors are in place. Is it comfortable? No. Does it suck? Yes. But it's part of this specific trading process. So that's why whenever I do my trades, I try to risk small because I know going into it that the drawdown can be very deep. So that's the key, is just to fully accept this. So if you're able to fully accept the loss first, then it allows me to do my trade without interference. So like in this case, if it goes and stops me out, that's okay. I would still consider it an A+ setup in my book. And I would just have to look for another setup, right? Because at the moment in time, gold is essentially pumping up overall. But we just have to wait and see what price does. So like in this case, that would be 405. And then 405 minus 204, that's like 403.04. So still pretty good. I'll be happy with that if it worked out and everything. But the key thing is this deep drawdown that happens. It does happen quite some time, and sometimes I'll use a late entry to take advantage of it. Now with the initial setup that I had of a 3.12, I should have just simply waited for it to fill the gap, but it was so small that it was so minuscule that I didn't feel like I should just go and miss out on it. Maybe that's something I'm going to work on, but we'll see. So as long as we're doing this, we just let price do its thing and hopefully just trust the process of a long series of trades. So with this one, with that in mind, I'm just going to keep the P&L running so you guys can see where we are and where we're targeting to be. I'll occasionally be checking because obviously me as a trader, I don't necessarily enjoy the ride from here to here. But if it does say order filled in either direction, I'm going to step in, analyze everything, and then we'll see if there's another good play to take advantage of. So we'll let that do its thing. And I will be back. I'm just trying to save my mental until it's like halfway. So it is what it is. I'll be back in a few minutes. I'll keep an eye on it off the chart. I'll probably be looking at it on TradingView without having to see all these numbers flying in my head. And then after that, we'll see the result. So, okay, here we go. Okay, so we're going to be analyzing what's happening to the price action. So pretty much over here during the manipulation hour, we're able to close above this box, meaning we're able to form a successful bullish CRT setup. So we have stage 1 complete, this being the accumulation stage. So I'm going to draw the boxes over here. We're going to label this as the 5 a.m. candle. So we'll type in 5 a.m. accumulation hour. And that will be an EST. Okay. Second one, we're going to write the 6 a.m. manipulation hour. So we're going to go here. Okay, so this one's going to be 6 a.m. manipulation hour, EST. Now the distribution hour can vary. So from here, it would be from 7 to whatever, how long it takes to get here. So I don't know how long this trade will take. It might take maybe 2 or 3 hours. I'm not sure. It depends on the price action. So I'm just going to put it in like this and say 7 a.m. to around 9 a.m. EST, and that would be distribution hour. Now, again, anything can happen, right? With these trades, it is essentially, I am doing a lot of anticipation of price movement based on what I've seen in the past. But, you know, it's something that has worked for me personally. So I'm just kind of using that to my advantage and just using the odds in my favor. So ideally, 5 a.m. is complete. Manipulation hour is complete because it formed this fair value gap. Now the goal is for price to push up and tag us out over here. So I naturally will always be pushing to tag out the top because the whole idea of this CRT setup is sweep the bottom to get to the top, or if it's on the reverse side, sweep the top to get to the bottom. And this is kind of the model that I'm using. So the main thing is, right now, you guys should be able to see the price here. You should see the P&L here. You see everything. But my main focus is just on the chart itself. And the reason why I have to do that is, imagine if this was like thousands of dollars, it can kind of mess with your head sometimes. So as I am going to be growing the account, you'll probably start to notice over time that I may have to step aside because sometimes emotions can kind of get involved, and I try to, prevent emotions from coming in. So that's one thing that I'm working on. So I've developed a little technique for myself personally where thankfully the price is on this side, but my eye is more focused on the chart. So I do know what I'm risking, and I've fully accepted the result of the trade because I don't know what will happen. But it sometimes can still be mentally tough to keep seeing numbers swirling all over, because with these CRT setups, it could go up here, do a tight turn, go all the way down here, and then do this, and then finally go up. Like I had a trade with copper. It's crazy. But I just followed through with it. Let me kind of show you. We will double back on this, but I just want to kind of show you the volatility that can sometimes happen when you trade the CRT model. And that's why with this model in particular, we do not really trail price until it hits the top of the box. Then I have a unique system that allows me to keep pushing. I will only really reveal that if I get a setup that qualifies for it. But the way it simply works is, if I had entered this at like a 3.5 R, then what I would do, let me just kind of use it as an example. I don't want to mess with that, but let's just say I hypothetically entered it around here, right? So what I would do is, as soon as price is about to hit here, I would raise my stop loss to around a 2R, which is right here. And the bet is if I felt like there's really strong bullish momentum, is that it would push up and I would trail price based on the formation of any fair value gap, 5-minute fair value gap that forms outside of the box. So that happens actually quite a lot in certain trades. It's just for me personally, I didn't want to enter at a 3.5 because my target was here at a 3.28, and I actually entered a little bit earlier at around a 3.12. But based on everything, I was comfortable taking that additional risk just so that way I could be able to get tagged in. So, that's one thing I will work on just a little bit, but overall, it still filled it. So it filled it. It went really close, but now it's pushing up. But we'll see what happens. We don't jump up and down until the trade is complete. So that's one thing. Now, we will double back on this. I just wanted you to see the kind of volatility that can happen whenever you're trading this CRT setup. Because I had one recently, yesterday, with copper, which was an off-stream trade. So let me show you on TradeZella. We'll double back on this, no problem. Okay, so if we go to TradeZella right now, and I take a look at copper, if I take a look at it, and we look at this image, do you see how crazy volatile it is? I had to use a late entry. I entered here, but as you can imagine, price was doing a lot of movement up and down, up and down, up and down until it shot up. Sometimes with these CRT setups, the destination from the bottom to the top or the top to the bottom is very volatile. And that's why you have to fully accept the risk. The time where I'm trailing, it has to literally hit this, and then I can raise my stop loss to a 2R with the anticipation that if there's a lot of bullish momentum or bearish momentum, that it will continue, right? That's my mindset going into the trade. But I haven't really seen a good setup that allows me to do so, or I've just been put in a position where I haven't felt comfortable doing it because either I need to make sure that I'm up on the week or up on the day. If I'm up on the week, but then let's say I'm down on the day, I'll typically just go and take a base hit and close the day strong. That's just the way I prefer to do it because it helps me to stack up a lot of winning days. However, if I am up on the week and still up on the day, meaning this is the first trade, then I can really push the trade if it makes sense to do so. So that's pretty much what I wanted to show you guys, is that using CRT is not always a fun ride. That's why I always accept the risk before I take the trade, because I know going into it, those distribution hours can be very volatile. And if you try to do like partial here, partial there, it completely kills the profitability of the edge itself because you're messing around with price. So when I set a price, I just set it, I accept that, and then I move on. So I keep my risk low, but it compounds because it tends to be high risk to reward. So that's pretty much my nugget of wisdom for the day. And now we just wait for it to do its thing. So we're going to go back to full screen. Going to make sure everything is in view so you can see the full experience of what it means to go through these trading sequences. So we're here, and now we just sit and wait to see what price will do. So hopefully it'll go hit the 405. So if it hits the 405, would walk out the day with a 403.04. And if that's the case, we would basically be closing the week strong, but we'll see what happens. So just sit here, watch price. And if you have any questions in the chat, let me know. I'll be able to answer it. And we'll just be looking at this and just see, how it's going. Because basically this is the part that is the toughest when trading this system. It's because naturally, the mind hates losses. But that's why I always put the number and I fully accept whatever that loss is, because to trade this system, you cannot be trailing price until it hits the top of the box, and then you can trail it. But if you trail it like in between, then you're just gonna be going through a lot of volatile movements. And that's what I'm trying to focus on, to learn how to hold and push to the target and just focus on compounding gains. So that's pretty much it. We'll just have to wait, see the result. And if you have any questions, just let me know. I'll be able to answer it in the chat below. That rhymed. Okay, so right now with the price action, it's about close to halfway to the target. So we're going to check and see how it will handle the movement. Hopefully it'll just do a quick pump up and no shenanigans. But again, part of the trading process is just to allow the distribution to do its job. Now, I want to show you this very important correlation. If you take a look, and we'll take a look at GC. At one point, maybe if you're taking a look at TradingView, it was like at minus 22 points, right? But it was able to push itself up. And now it's trying to kind of push itself upwards. So knowing this, there's a good chance that it'll hopefully push up, but we'll see what happens. Now I'm hoping that any slightly bullish momentum on GC is getting compounded with silver. So the hope, right, is that if you take a look at the silver, is that anytime GC is going up, it like takes it and like multiplies it by 2. You know, it just tries to push it just a little bit more. That's the hope that it will follow through. But at this point in time, it's just a waiting game to see what happens, because it does get affected with gold. So if gold is pumping, then silver is going to be going up as well. It's just sometimes gold, when it does its thing, it tends to be kind of volatile. So you have to kind of adapt to its style. Now, the reason why I'm anticipating that it's going to go up is it's because of the bullish SAR dots, and it's hovering around the 50 EMA. So ideally, it's most likely going to try to push up, but it is kind of struggling if you're just trading gold on its own. That's why I opted to go with silver, because silver gave me an A+ setup, because now we have it above the 50 EMA and we have the bullish SAR dots. And unlike gold at the moment, which is kind of in this weird consolidation phase, silver is just going up. So any little bit of bullish movement on gold, silver is taking it and just running with it. And that's why when I was looking at it, I was looking to see what is an A+ setup. This looks A+, but again, we have to wait until it hits the target. But I just wanted you to kind of see why sometimes I will look at gold, kind of see if it's moving upwards, and then see if I want to trade gold or trade silver or HG. HG is just, I don't know what HG is doing, but HG did not present like a good, clean opportunity. Out of the other options I see, it's silver that seems to be the best at this moment in time, but it has hit the halfway mark. Now we just want to see if it'll hit the target, and if it does, then we'll be able to see what happens next. So that's kind of how I use the metals. I usually look at gold to kind of judge the overall direction for the metals, and then if I see an entry on gold, I'll take gold. But if I don't see an entry on gold, I'll look and see if silver or copper can give me an entry. So at this moment in time, it's just a waiting game. We are just going to keep waiting, try to see what price is going to do. And that is basically it. So we're just waiting to see if price will hit the target. And if it hits the target, awesome. We close the day. If not, we've already accepted the loss if it is a situation like that. So it's more of the concept of, I'm not saying don't be attached to the P&L. I'm not saying you trade recklessly, but you do use your stop losses in a way where you can allow the trade to do its job without wrecking your account. That's kind of like the idea of fully accepting the risk. What I'm simply saying is you shouldn't just be over leveraging, going crazy. Because if you do that, then it becomes unsustainable, because the whole idea with these prop firms is that you want to be able to use it to replace your 9 to 5 job. So if you start to gamble and not trade a system, then you'd be burning time. So one key thing is always accept the risk and always use good risk management. So that way you can be able to win in the long run. So that's pretty much my second nugget of wisdom. We'll see what price does at this point in time. It's just a waiting game. We'll see how price is going to react. And as I mentioned before, in the distribution phase, that price action can get volatile. It doesn't necessarily mean it just goes bing and it, go to the target in a nice way. Sometimes it will zigzag its way to the top. So you have to be aware of that. And that's why I say when starting off with this strategy, just focus on hitting the target. Then as you start to advance, then you can be able to trail after it has hit the target to kind of push even higher, because this setup always tends to act like a swing low that you can use to push price up higher. Sometimes, not all the time, but sometimes. So that's mainly it. We're just waiting. And if you guys have any questions, just let me know. Okay, so right now we've definitely officially hit the halfway mark. Let me do this so that we can kind of see it. If I go to style, I choose the middle line, click OK. So now over here, ideally, we want to see that we have a candle close above. So if there's a candle close above that halfway point, there's a good chance it will hit the target. So now it's just a waiting game just to see how price is handling the halfway point. Again, part of this whole process is fully accepting the risk. So when it comes to trading this strategy, this is one of the things that I've had to adapt to, is just to learn how to accept that risk while keeping the risk small, because the goal is to compound. You know, compounding goes both ways. It can go on the positive or the negative. So you want to do everything you can to skew the odds in your favor. And one of these days, I need to create a video that shows how I trade this strategy, kind of like step by step by step. And then probably after that, I'll probably create a video on how I handle risk management, prop firm edition. So that way you can kind of see how I'm doing it. The way I'm doing it, it takes longer, but it's more sustainable. So in the long run, the whole idea is for that sustainability to kind of reduce expenses down and have a high ROI in terms of investment. So I'll kind of show you how I do it in an upcoming video. But the first video I really want to do is just to show how I trade candle range theory for beginners. So that way you can kind of see it step by step by step. I think that would be a very helpful video. And hopefully that video can help draw more eyes to the Sniper Gains channel. If you're noticing that this advice has been helping you a lot, it would be awesome if you could let people know about the channel. It really helps me out, and I would appreciate it. So now, again, as price is doing its thing, it's going to go for that volatile movement going into it. Again, part of this process is basically no touching. Let price do its thing. That's why I have to fully accept the risk ahead of time, because I know going into it, the distribution hours, it tends to be very volatile. So we'll keep checking up on this. There's nothing else I can really do but just narrate what I'm seeing, right? So we'll just have to wait for price to do its thing. And then as it goes along, if I see another new update, I'll chime in, kind of explain what I'm seeing, and then we'll see if it'll hit the target. Cool. So right now, you probably see that the price is going down. And the reason why this is happening is because gold is taking a dump right now. So if gold can't push up and it keeps going down, there's a good chance that this will probably be stopped out. So we'll see what happens. So we'll wait it out and see if it will hold or not. Because gold, in my opinion, should have gone up, but apparently it wants to go down. So this is happening. We'll see if it will jump up at some point, but based on the price action, especially since it's gone down to about 19 or 20, 21.6, it's most likely gonna go and stop us out, which is fine, but we have to stick to the trading plan. So here we go. The stop out is about to happen. Let's see. Okay, and now we'll have to see what's going on. So this is unique. I thought for sure gold would pump up, but as I'm seeing right now, it's playing games with me. So now it's going to 14.6. 15.1. So I don't know if it's going to make a decision to either pump up or pump down. So this is a unique stage. So for me, as I said, I fully accepted this amount no matter what. So with that being said, we just have to wait for it to do its thing. So this is where we just have to wait. And then since we risked small, it gives us an opportunity to see if we can get a possible entry. Just in case gold decides to power drop, we have enough capital to try to get another trade if we see a good, valid setup. So this is just a waiting game. So let's see. Okay, and I think we're going to go for that stop out. There we go. Okay. Price is pushing. Let's see. All right, let's see. It's basically what's happening with gold right now. Something's happening where there's a lot of selling pressure. There's a lot of buying pressure kind of fighting each other. And that's naturally affecting silver as well. So we'll see what happens. Okay, we're out. So basically, there's a lot of bearish pressure going in. Let's take a look. So we took a hit of $127.04. It's not exactly ideal, but we are still within our risk. So now if we take a look, we're down on the day, which is 127.04. Okay. So now that we're down on the day, we're going to have to record this. So let me go and record. And then we're going to analyze and see what happened with gold. So gold at one point was going up, but then now it decided to kind of go down, and now it kind of basically forced us to get stopped out, right? So with gold, however, it's getting in this weird, tricky situation. Like it wants to stop us out, but it's like wanting to go up. It's in a weird range. So in this case, we're simply going to have to sit on our hands to try to see if gold intends to go up or intends to just stop us out, because it's not as clear. So we'll see if there's any new opening, but at the moment, we're going to have to be hands off, but we are going to record and see where we are in terms of our overall profit. So we're going to go to TradeZella. We're going to go to add a trade, go to the funded, go to futures, again, go to SIL. So now, since I am copy trading, this 127 is going to be times 2 because I took the hit on both accounts, right? Kind of sucks. I personally don't like that I had to take that hit, but I do follow my rules because I cannot be going over here and just gambling, right? I got to follow my edge. It just so happened that the edge took me out, and if it goes all the way up, I'll be pissed, but it is what it is. So SIL, I'm going to zoom in. Now we're going to put in this information. So SIL over here, it's 1. It'll be 2 contracts technically because I did double. So SIL, boom. Contracts will be 2 to account for the 2 accounts. And then cost is going to be 204 times 2, and that's going to be 408. Oops. That's going to be 408 on the fees. And since this was bullish, so we're going to start off with a buy. So the buy is 47.795. And then we're going to paste it here. And then the sell is going to be 47.670. And then the expiration date, I always just put it at the end of the month. I know it's probably beyond that, but just to keep things simple for me, I just put it at the end of the month. Now, today, it's the 30th, so we're going to record that. And 30th again, I'm going to record that. So, I'm going to put it in the time, so 06:15:39. And then for the exit time, it's going to be 07:33:19. Okay, so we've taken a combined loss of $254.08. This would go into the bullish 1-hour CRT. So let's see. Okay, so now we're going to go to the dashboard, and you'll see that it's 254. So on the week, we're down by 300 up on the week when you combine both accounts. So with that being said, we have 2 more slots available. Now this is where the risk management part of it comes in. So we're going to pull up our notepad. So in the notepad, we just say trade 1, we lost $127.04. And because my starting balance was above 4,000, the maximum I can lose in a day is $400. So now the remaining balance is going to be 400 minus 127.04. 400 minus 127.04. That's $272.96. So I got a remaining balance of $272.96. So the goal is just to see if I can be able to find a good setup where I can use that balance. So let me put this in TradeZella for my notes. I'm going to go to the notebook. We're going to log the day, choose today. Then I'm going to write that part down. So trade 1 was type is bullish 1 hour CRT on silver. It was a loss. And now we have a remaining balance of 272.96. So we're going to highlight it. Okay. And then we're going to highlight this as well. So now I know that I cannot be risking no more than $272.96. So I will typically cut this in half and then see if I can take a second trade to close the day green. Now, I don't know if it'll close the day at 200, but we want to try to at least close it green, and then we'll try another day for that 200. So with that being said, I'm going to take a look, reanalyze the situation. I hate you, gold. Very annoying. But it did sweep. And the way this is playing out, I think this is going to be an upper trend to the top. So I'm going to play it to go long on gold. I know it's crazy, but the setup is looking like gold wants to take out that stop to go up. So I'm just going to have to use a late entry on this one and then try it again. So here it did form that fair value gap, which is good. But we need it to be at least a 2R. So if we want to do this and we're targeting the top, and we're doing this, we're going to have to at least go maybe around at least a 2, but ideally a 3. So ideally a 3 would be perfect. Like maybe a 2.6. We'll try to go long based on what I'm seeing. It's like price was kind of messing around. And it kind of sucks that that happened because I was hoping that silver would have held it down. But unfortunately, it didn't. So that's one thing to keep in mind. I'm going to take a look at the other one. Let me clear this out real quick just for 1 second. All right. So we're going to try it on gold one more time. Hopefully, this is the right one. No shenanigans today. And then we'll kind of see what to do next. So we're going to go to here. We're going to type in MGC. We're going to do the setup again. And then we're going to try it again. So we're going to zoom out a little bit. Bam. Because the setup is looking like it really just wants to pump up. It just kind of messed us up with that sequence. So I want to make sure I've aligned everything, that the way I'm doing it is accurate. So here we go. Bare minimum, it has to be a 2. So if I'm doing this, I got to make sure it's at least bare minimum a 2. So here we go. Bare minimum's got to be a 2. That's 126. So I think that we should be okay. With that being said, 254. 254, it wouldn't give us where we wanted it to be, but for right now, we're going to have to work with what we got. We're going to go with a limit buy. We're going to set it to here with the risk knowing it's going to be 126. And if it does tap, we will have to kind of accept that it might not be a $200 winning day. But we'll see, because we don't want to push our luck and have to, we don't want to push our luck and run into a problem where we cannot be able to hold price down. So I have to kind of be mindful of how I'm going to attack this trade, because the trade setup, it's there. The gap is there. I did see it. me see. I did see it on the other hour. 1 second. It doesn't show it here on the MGC, but it does show it on the GC, because the GC did show that fair value gap. It's like literally right here. So what I will do is I'm just going to play it conservatively. So in the conservative way of doing this, I'm going to let it hit the target. We try it again at a 1 to 2, bare minimum. I know it's not showing here, but I can be able to justify it because I did see it on the other one. So we are going to have to do a little adjustment on that. And with that being said, I'm going to, why am I on the 3 minute? I'm supposed to be on the 5 minute. So on the 5 minute, it's there. Okay, there we go. I don't know why I was on the 3 minute. That's why it kind of threw me off. But yeah, there's the fair value gap on the 5 minute. So I'm going to go take this. And then now that we've set it for a 1 to 2, we're going to play conservatively. Now, I'm going to set this here. Okay, that's 126, well within my risk. Now, if we set it to hit the top, it would be 256, but we took a loss of 127.66. So if we're going to play this right, we may have to let price push just a little bit more. So if the cost is only one contract, I know that for a contract on MGC, it's 124. So 124. Okay. So now we would put in 127.66, 127.66 plus that 124 equals 128.9. So 128.9 plus 200 is 328.9. Okay. So if that's the case, 328.9, oops, 328.9, if that's the case, we are then going to have to push this up to maybe 353. So this is a slight counter trend. And the reason why I'm trying to go with this one to push up is because of the sequence I'm seeing here. Now, gold is getting a little bit crazy. It is getting a little bit crazy. So I'm hoping that the, that the bullish momentum will hold, but there's no guarantee with this. So ideally, I'd want it to hit around there, 2.89. If it goes and taps me out, I'm probably just going to call it for the day, because then I think I would be tilting and I don't want to. So we'll see what price does. We're going to practice discipline and risk management. So we're going to adjust it here and then see what's going on, because this would be two trades. One trade would be an A+ setup. This would be a B setup because it's still counter trend a little bit. But we will see how it plays to it. Because if it can't do it on this one, then I'm probably going to have to close it for the day, because I don't want to be, over risking stuff. So we'll be just checking it out, see what's going on. Because if price is acting weird and it's not following the game plan, then it's best for me to skedaddle out of the trade if it doesn't work out. So we'll see. We'll see what happens. If it does take out this stop, I'm out for the day. And then I'll just have to reset and try to do it later on in the evening. Yeah, this is going to be my last attempt to go pretty much long. Try to see if it'll muscle through this. But if it can't, then I'm basically out for the day. And then I'll just have to wait until the evening session for an easier price action to deal with. Because I really was confident that silver would have gone up, but when gold goes down, they all go down. So we'll see. We'll see. Okay, so what's running in my mind is, do I take the chance to push up to hit that target of 200 to close it strong? Or do I go for the base hit at 255? So if I went for 255 minus 127.6, and then minus another 124, is that we would be closing the day at 126.10. But if we get it to $200 winning day, it could be helpful. So this is a unique situation. Either way, this is going to be the last trade, win, lose, or draw. But I'm trying to think of how or what would be the smart play here. Okay, the smart play is what I'm trying to think of. So let me see what I got to do, and give me just a minute. I got to do some mathematics. So here we go. So if I took a loss of 127.66, I at least need to know where the 130 marker is to be break even on the day. So 130 is about there. So this would make me break even for the day, just in case, right? So break even for the day, it's not good, it's not bad, but it's just break even. So that would be break even for the day. If it does go up, it is slightly counter trend, slightly, if it goes up. Now, for me to be 200, so because that's the key, that would make it the last trade that I would need to get to request the payout. If it makes it, that is. We would need to go a little bit higher. So the idea is, if it hits here, raise the stop loss to here to protect, at least to be break even on the day, and then try to push for the target, which would be the $200 day. So for that to happen at 127.66, so 127.66 plus the, sorry about that, 124, right? So that plus 124, 127.66 plus 124 equals 128.9. So plus 200, that's 328.9. So at least bare minimum be around maybe even like 332. That way I can know how I'm going to play the game. And then that would be a $200 winning day. If it works out. Obviously, if it doesn't work out and it stops us out, then we're out anyway, no matter what. This would be the last trade. But it's just so that way I can visually know, what to hit in terms of trailing price. So price still has to hit here before I can trail. It just so happens sometimes that if it can go and blow past it, and if you can blow past it and still have a winning day, then it's a win, right? That's kind of like the idea behind this. Now, this one is slightly counter trend, slightly, but if it doesn't work out, I'm willing to accept the loss, and then that would be it for the day, because I do not want to go past this amount, because I have to think of my average win to loss is about like 300 on the win, and I try to keep the losses around maybe 100 and change. So we'll see what happens. But I think it's gonna probably be might be a loser, so we'll see. We just have to let price do its thing. Yeah, and I think we're going to be stopped out for the second time, and that'll probably wrap up this stream. So it's all about gold. If it wants to keep going down, then after this setup, then there wouldn't really be any good setups for me. I would have to wait until the Asia session. So this is like the last Hail Mary pass just to see if it will work. If not, we're going to have to get moving. So my hope is that it will start to move up, but I cannot deny that it is definitely taking a hit as well. It's kind of in a weird spot because you have the bullish SAR dots, but it's not fully yet above the 50 EMA. It's in this weird gray zone, and that's what makes it a little bit tougher to trade. My bias is to the upside than the downside, but obviously I could be wrong, right? So that's why I try to keep my risk low, just in case I'm wrong. I can still live to trade another day. So now we just have to wait and see. Okay, we're out. So now, since I've taken 2 hits, we're going to stop it. It just seems like price is just refusing to go up. It's deciding to go down. So to make sure that I don't tilt, I'm going to set the lockout. And then we're going to say all day. So this kind of controls me so that way I do not start to tilt. Now, don't know what's been going on this week. We were up, and then we took another hit. So we didn't get our $200 winning day, but we did practice good risk management. We kept it tight. I was hopeful that the silver one would work out, but it didn't. So that's part of the risk of trading the CRT. Sometimes you'll win. Sometimes you'll probably not. You never know. So the key thing is you want to keep the losses tight as possible. So I'll definitely take a look and see the price action during the Asia session. There was only one good setup that I couldn't have taken today, but it is what it is. I got to keep moving on. All right. Thanks for watching the stream, and I'll see you on the next one, probably tonight. All right. Peace.